let's do income tax returns. Now this is more of a theory chapter, just to understand how these filings, we have to make the filings, because I have already understood the income tax. I know I have to pay tax, but when do I pay the tax? Can I get up today and say, okay, now I'm free, it's Sunday, I'll go and pay tax? No, there is a process to pay tax. When you have to pay the tax, how you have to pay the tax. Can I take my money in a bag and pay it? Where I have to go to pay it? All of this we'll see in this part. Okay. Self-assessment. So the first thing starts with self-assessment. Every person, before even going to file the tax, you have to do assessment of yourself, that am I even liable to pay tax? How will you do this? You cannot roll a dice and say, okay, if it is number 6, then only I'll pay the tax. No, right? You will see your income. You will see what investments I've made, what deductions are available, what exemptions I can claim, and then you will see whether I am above the basic exemption limit or not. So if I am above the basic exemption limit, I have a net income of 10 lakhs from all my 5 heads of income. You'll find your tax liability. Once you find your tax liability, you will pay the tax. So person himself assesses his tax liability. You will not go to the assessing officer and tell him you do the calculation. No, you will yourself do the income tax calculation. So that is called self-assessment. Simple. Then after that, then you will file the return. If at all there is a notice, you will reply to the notice, etc., etc. The total tax payable is calculated on total income of the assessee after considering the following amount. The amount of tax already paid, any tax deducted, any relief, etc. So if there is double taxation, if you have already paid tax outside India, can I claim a relief over here? All of this you will take into consideration to claim your tax liability. Okay, if there is a delay in furnishing return, you will also take into account interest for delay, and you will find your tax liability. All in all, okay. Now, then you will start with filing of the return. The filing of the return is done under section 139. So whenever they say when you have to do the tax filing, under section 139(1), it is an obligation for every person, being a company, firm, any person who is required to do their audit, to file their return and who has a tax liability. Okay, even a person, compulsory filing of income tax in relation to assets outside India. I may not be falling within your tax, my exemption limit, but if I am holding any asset outside India, as per your latest notification, you have to make a disclosure. Total sales, revenue, total receipts, okay, during the previous year. Then if the total tax deducted and collected by a person in the previous year deducted is 25,000, threshold limit of rupees 50,000 in case of a resident individual if you are a senior citizen. If the aggregate deposit in one or more saving bank account is rupees 50 lakhs or more during the previous year. So return of income is mandatory, even if I do not have any, even if I do not have actually any income in that year, but in my bank account there is 50 lakhs or more, then you have to make a mandatory filing. Okay, due date for filing the return. When is the due date for filing the return? Any company other than a company is required to furnish a return under Form 3, that is basically having arm's length international taxation. Any kind of company which has transfer pricing, basically. So all companies which are having Indian businesses only, and there is no transfer pricing requirement. Transfer pricing is basically when you are selling assets to your holding subsidiary, affiliates, etc. Then a concept of transfer pricing comes in, when you have to do it by 31st October. Any person being assessee who is required to furnish a report, basically transfer pricing report, and 30th November. A person whose accounts are to be audited, same 31st October. A partner of a firm, again your accounts are to be audited 31st October. Any other assessee by 31st July. So you will see all the rich people, if they say in October I have to go and run and file my return, that means they are talking about this. Okay, where do they fall? They fall, their accounts are being audited. Okay, individual and spouse, they all have to file the return. So let's just take 2 3 just general questions. Let's see question number 3 and 4. Okay. Mr. Rahul is running a garment factory. Turnover of his business amounts to 1 crore 85 lakhs, 84 lakhs. He opts for presumptive taxation under 44 AD. If he is, it should strike you. He is below 2 CR. He is doing presumptive taxation. He need not get his accounts audited. So what will be his due date for filing return? No audit required, 31st July. Okay. Let's see this. Mr. Kaushal is a partner if he is a partner in a partnership firm. Okay. The turnover of the firm for the financial year is 2 crores, 2 crores and 84, 2 crores 84 lakhs. Apart from remuneration, interest, share of profit, etc. is there. Mr. Kaushal is not having any other source of income. What will be the due date for filing the return of income by the partnership firm and by Mr. Kaushal? The turnover exceeds 2 crores. Hence, firm will not be eligible for presumptive taxation. They will have to get the accounts audited. Hence, the due date for filing the return in case of the firm and Mr. Kaushik is 31st October. Okay, simple. Let's do one last one, 9. Mr. Raghav is a salaried employee. He gifted a holiday package of Dubai to his brother Raghav and paid a total amount of 2.5 lakhs to tour operator for the holiday package. His salary income for the financial year is only 2 lakhs and has no other income. Whether Raghav is liable to file return. If he is a person liable to file return, he has aggregate expenses in excess of 2 lakhs for himself or any other person for travel to a foreign country. So whether a person incurred expenditure now for himself or for his relative, that is irrespective. 1 minute. So following persons are mandatory required to file the return. Okay, if he has deposited an amount exceeding 1 crore. Okay, in one or more current account. If he has incurred expenditure or aggregate amount exceeding 2 lakhs for himself or any other person for a foreign country travel. If you are going abroad or you spend money for 2 lakhs for a foreign expenses, obviously you have income. So you should file your return compulsorily. Has incurred expenditure of an amount exceeding 1 lakh rupees towards consumption of electricity. So basically, if your electricity bill is 1 lakh or more, then you have to file your return. Fulfill such other prescribed conditions as may be prescribed. Okay. Now let's see other concepts of return. So over here, let's come back. So there is a holiday package he has spent. So then in this case, Raghav has purchased holiday package worth 2.5 lakhs. Thus, he will be liable to file return even though his total income does not exceed to the basic exemption limit. Now, let's go to return of loss. Even if you have made a loss in a particular year, you still have to file a return. Why? Because you want to take benefit of the loss so that next year you can set off your losses. Okay. Now, loss under the head of income from house property, unabsorbed depreciation can be carried forward even though you have not filed a return. Only these two specific losses, house property and unabsorbed depreciation. For any other loss, you have to file your return. Okay, the assessee would not be entitled to carry forward the loss or set off if there is any other loss and you have not filed the return. So if I have got a loss this year, file your return stating the loss. Belated return. Any person who has not filed the return within the time allowed under 139(1) may file a belated return for any previous year. So I got late, I did not file it. How you say belated birthday? Same thing, belated return. I did not file at the time. So any time before 3 months prior to the end of the relevant assessment year or before the completion of the assessment. Now let's see for the financial year 23-24. What will be my assessment year? 24-25 will be my assessment year. So when can I file the belated return? For 23-24, I will file any time before 3 months prior to the end. So when does this end? You'll say it will end on 31st March, before 3 months. So I have to file it by 31st December 2024. I have to file it by 31st December 2024, prior to 3 months to the end of the relevant assessment year or before. And basically, what is your date? Filing date 31st July if you don't have to do any audit, or it will be October, 31st October. Okay, they are saying by 31st December is the latest you have to file your return. Okay, following are consequences of delay. Loss cannot be carried forward other than house property and unabsorbed depreciation. Levy of interest because you have not filed your return. Levy of fee, that is your late fee. Interest, late fee, exemptions will not be available. Deductions will not be available. Okay. Now let's see. We'll do question number 2 first. Mr. Raja is a trader of agri products. Turnover of his business amounts to 84 lakhs. He has opted for presumptive taxation, that is he has not opted for presumptive taxation. That means he's doing an audit. He declared income at less than 8% of sales. What will be the due date for his? So if he's doing an audit, it is 31st October for filing his return. If he fails to file the return, by what date he can file it? So he has to 31st October. By what date he can do it? By 31st December. If the assessment is completed before that, if the assessing officer on 1st November sits and says that, okay, I want to do the assessment of this guy, then he cannot file the belated return by 31st December. He is gone. So they will then do a scrutiny on him. Okay. Return of income of charitable institutions and trust. So that is under section 139 4A. Every person, so even if it is a charitable institution, you still have to file your return of income. Okay, because of what? Being voluntary contributions, donations, you have to file your return of income in case the income exceeds the amount, maximum amount chargeable, not chargeable to tax. So basically, if you are earning more than 2,50,000, any kind of donation, you have to file your return. Okay. And who will do it? The representative assessee for the receipt of income derived from the property and the trust. Basically, they will do, if you are running a charitable institution, you have to, and you've got donations or voluntary contributions about 2,50,000, that is your basic exemption limit, you have to file your return of income under section 139 4A. Then under 139 4B, all political parties also have to file their return of income if it exceeds the amount not chargeable to tax, duly signed by the chief executive officer of the party. Return of income has to be filed by researcher. So it's not there is no person who says that no, I don't have to file. All of them, associations, institutions, research associations, mutual funds, okay, securitized trust, venture capital funds, trade unions, any body or authority or a board, infrastructure debt fund, everyone. The above person shall, if the total income without giving effect exceeds the maximum amount which is not chargeable to tax, furnish a return of income of the previous year in the prescribed form and verified in the manner setting forth. So you have to file your return and in the manner that is prescribed, in the form that is given. Okay, revise return. If you realize that, oh listen, I have made a mistake in the return, you can even file a revised return. By when? By 31st of December. Okay, before the expiry of 31st of December or before the completion of assessment. Updated return. Now this has been inserted, so we'll do this entirely. The Finance Act 2022 has inserted this updated return concept in section 139 to enable the filing of updated return. The section provides the updated return can be filed by any person irrespective of the fact whether such person has already filed the original, belated, revised, any kind of return. Any updated return can be filed at any time within 24 months of the relevant assessment year. However, an updated return cannot be filed in the following 3 situations. Okay, so by when you have to file it? Within 24 months. Any time within 24 months. Okay, an updated return cannot be filed if it is a loss return. Return is lower tax liability determined on the basis of original, revised, or belated return. Results in increasing the refund. So for all of this, you cannot do a updated return. A person cannot file updated return where a search has been initiated under 132 or books of accounts or any assets are requisitioned, a survey has been conducted, or notice. Basically, the authority is already sending you a notice, then you can't file an updated return. An updated return cannot be filed for the relevant assessment year wherein an updated return has been furnished by him. So you have already filed an updated return and any proceedings for assessment or reassessment or recomputation or revision is pending. The assessing officer has information in respect of smuggler and foreign exchange manipulators, prohibition of benami transactions, prevention of money laundering, black money, and imposition of tax act, and the same has been communicated to him. Information has been received under an agreement, that is your DTA, double taxation avoidance agreement, in respect of such person. Same has been communicated prior to the date of furnishing the return, updated return. Any prosecutions has been initiated. An assessee is such person or belongs to such class of persons as has been notified. So could be, for example, could be anyone dealing in online gaming. So all those people cannot file updated returns. Basically, anyone who has already done a revision, someone who has already, there is a investigation already going on, you have already filed an updated return. Otherwise, any person can do an update of the return after 24 months, within 24 months, basically. So if my final assessment year gets over 24-25, I can do updated return up to 24 months will be how much? 31st March 27. Okay. What is defective return? If the assessing officer considers the return of income is defective, he may intimate. So basically, you have not signed it, or you have not given your PAN details correctly. He will call you to rectify it within 15 days. Okay, if assessee fails to rectify, the return shall be deemed to be invalid. Okay, then every return has to be signed. If you are as an individual, I'm filing it. Who will sign it? The individual himself. If it is a minor, the parent. Okay, the guardian, etc. Then HUF, the Karta. If it is a local authority, the principal officer. If it is the firm, the managing partner. If it is an LLP, the designated partner. Okay, the principal officer. If it is any other association, any other person, the person who is competent to act in this behalf. Okay, company, the managing director. Then insolvency professional to verify the return of income where there is a corporate insolvency has been. So IP in case of a insolvent company which is in the process of insolvency. Okay, now this next part is important. I'll mark it as important. So this all was theory. This part you have to remember the dates. Okay, so interest on default in furnishing return. If you have not filed and return, you have to file and return. Then there is a penalty of how much? Simple interest at the rate of 1% for every month or part of the month on the amount of tax on the total income. So it will be 1% on the tax and where regular assessment is made. So the total tax on the amount of tax or the total income determined under the regular assessment. So basically 1% tax will be your penalty. So the period for which interest is payable commences from the date immediately following the due date for filing the return and ending on the date of furnishing the return. So 1% into the tax amount into due date of filing the return. The period for which the interest is payable commences from the due date following the due date for filing the return and ending on the date of furnishing the return. So due date, let's say, is 30th October or 31st July. That is the due date for filing the return into actual date when the filing is done. Immediately following the due date for filing the ending on the date of furnishing the return. When no return is furnished, the interest will be payable from the due date till the date of completion of assessment. So it will be completion of assessment date by the assessing officer. Okay. Now, interest on default. Now you have to pay your tax in advance. If you do not pay your tax in advance, again you have to pay penalty under 234B. How much? 1% for every month, part of the month. So you will take 1%. First day of April following the next financial year to the date of determination, and where regular assessment is made to the date of regular assessment. So it will be 1% into 1st April. It will be the amount, date of determination, and where regular assessment. In case where the assessee has paid some tax, the balance. So only balance tax into date from 1st April to the date of regular assessment, whenever the assessment happened. Okay, so whatever is the tax that is liable. So let's say I was supposed to pay 100 rupees tax, I have paid only 50. So the balance tax of 50 into 1% into when? Till the time the regular assessment was done. Now the last one, interest on deferred payment. Now your income tax has to be paid in 4 installments during the year. Okay, advance tax is paid on or before 15 June is less than 15%, 45%, 75% of the due date of filing the return. So by the end of the year, by March 15, it has to be 100%. Okay, so they are saying that your due date for filing for payment of your tax has to be in the previous year itself when you are earning it. 15 June, 15 December, 15 September, 15 December, and 15 March. Okay, so it will be 15, 45, 75, and 100. You have to pay your taxes. 15% of your entire yearly taxes you have to pay by 15 June. By September 45, by December 75, and by March you should have paid your 100%. So if you don't pay in these amounts, then you have to pay 1% per month on the amount of shortfall from the date of the tax date, 1%, so that is 3 months if you don't pay the first installment on the amount. Okay, like that it will go on the tax due on the returned income declared. Okay, so now how much you have to pay? 15, 45, 75, 100. They are saying okay, possible that you won't be able to make the correct assessment, so instead of this you don't pay any, you are liable to pay 15, but even if you pay 12 it's fine. They have reduced this 12% and this to 36%. Okay, so there will be no interest, otherwise this will be the interest amount, 1% into the amount whatever is applicable into 3 months. Okay, now there has been an amendment in respect of an assessee. Interest under this section will be levied if the advance tax is less than the tax due on the returned income. So now the shortfall cannot be for this capital gains, because that you cannot envisage. Capital gains income, then under section 24 of clause 2, that is your income from house property, business profession. Okay, under section 115 BBDA. So okay, so they are saying if that is the case, then no. Then fee for delaying furnishing return, standard fee of 5,000. If the case where total income does not exceed 5 lakhs, then 1 lakh rupees. That is fine. Okay. Failure to comply, if you do not put your PAN, then it is the mandatory linking of Aadhaar is considered unconstitutional ruling. that individuals with an Aadhaar must link it to their PAN to prevent fraud, but those without Aadhaar are not forced to obtain it. So you do, if you don't have a Aadhaar, it's okay, but you compulsorily have to have a PAN. Okay. So now this is it. Just remember these 234A, B, C. What we have, I have just written 1% into balance tax into 1st April to the regular assessment date. Okay, whenever the assessment has happened. So just remember this 30th October, that is the due date for filing return. And we are done. Okay, so we saw all of this. Okay, you all can go through these questions. These are theory questions. I hope you all are clear with it. Thank you.